Ladies and gentlemen, welcome back to another video. Today's one of those days where you look back and you say, I should have made that trade. And we're talking about specifically Robinhood. They just came out with their earnings. Spoiler alert, it was really good. And before we get into that, if you like this kind of content, please consider subscribing. And if you want to learn more about the basics of selling options, I do have a course. It's linked down in the description. It's a way that I've been making an extra $2,000 a month plus, and I'm also adding more to this course as we speak. I'm sharing some more examples of some trades that I would qualify as a good trade for me personally. So I share some more examples. Go check that out. I try to make it affordable. And yesterday's video, I talked about selling this put on Robinhood. And then I think it was towards the end of the video, I mentioned I might actually sell another put on Robinhood, but I was a little bit afraid because I didn't know what earnings was going to do today. And because of earnings being today, the premiums were really, really good because you have that volatility that can occur with earnings. And so I just stuck with this $149 strike put that expires this Friday. And if you look up here, you can see the price of Robinhood is currently $62. It's been up 16% after hours, and they beat across the board on both earnings per share and total revenue. Total revenue broke $1 billion for quarter four. And looking back, this is going to expire worthless as long as something crazy doesn't happen between now and Friday, which I don't think it will. This is going to expire worthless. Maybe I can buy it at close for a few bucks and just free up that collateral and start looking at selling other puts. But it's a shame because, hindsight's 2020. I didn't take the risk and therefore I don't get the reward. And that's okay. You win some, you lose some. I think it's less focusing about what could have been and more focusing about what I did. And I'm glad I at least sold this one put. In terms of selling other options, I haven't sold any more on SoFi specifically, because I've been talking about trying to sell some calls on SoFi to unload some of these shares, or at least potentially unload some of these shares and making money while trying to do so. And SoFi's just kind of been stagnant at like the 1475 level. If you were wanting to sell puts on SoFi, by the way, you had a decent opportunity today, right around where markets opened. It was all the way down to 1450-ish. A share. But unfortunately for me, I'm not looking to sell any more puts on SoFi for the time being. More so, I'm looking to trade the wheel on SoFi. So if we end up getting a bit of positive movement between now and this Friday, you can expect me to start selling some more calls. But speaking of selling calls, two trades I did make today, both on the SPY. One was rolling down one of my SPY calls. My original SPY call was $606. I rolled it down to $604 today for an extra $36 in premium. This $36 is the difference between buying to close my previous call and selling to open the new call. I've been asked a few times if I'm taking that into account, and I sure am. So this is what is net. What is the net credit given to me? And then later on today, I ended up rolling that call out to tomorrow. Same strike price, $604, making another $122 in premium. So in 2 days, $158 on the SPY. So far this month, $1,649. Just as things stand, things can change, right? I might buy to close a few or what have you. But that's just a snapshot. And if you want to purchase this template too and use it to track all of the options that you sell, that'll also be linked down below. Like I said, my course is down below if you want to explore what are the basics when it comes to selling options. You're wondering what selling a put and selling a call is. Go check that out. I'm continuously trying to make even more content for that course, so it's only going to get more valuable over time. And I hope to see you in a future video.